Good morning, student. Today, 14 July, Monday, Part 10, Lesson 2, Accounting Equation. Now, this will be the syllabus of your half-yearly examinations. In your half-yearly examination, Lesson 1, Accounting Equation, 2, Journal, 3, Ledger, 4, Final Account, and 5, Final Account with adjustment. These 5 lessons will be compulsory part of your half-yearly examination. If we have the time, the syllabus may be increased one, but these 5 lessons are compulsory. So, what is the accounting equation? Assets equal liabilities plus capital. This equation is called the accounting equation. Now, this equation was found in the books of math statistical part, and after then seeing the significance of this equation, one particular subject account has been developed on this equation. So you can realize the importance of this equation, how much it is important, because throughout the accounting or accountancy, they move around this equation. So assets, already you know, land, building, plant, machinery, furniture, fixtures, whatever the property you purchase for the business purpose, or either cash in hand or stock or goods you have for resale, all these are called the assets. Assets is the physical form. You can see and touch all the assets. If there is the intangible assets that you cannot see and touch, but those are also considered as assets, like a goodwill, patent, trademark, copyright, franchises. They are the intangible assets you cannot see and touch. Land, building, plant, machinery, furniture, fixtures, patent, trademark, copyright, goodwill. So all these will be considered as a assets. Now liabilities means if you have taken the loan from other person and invest this money in your business, that is called liabilities that you have to pay those person. Capital means that money which the owner has invested from his own pocket into the business. All the amount of capital and liabilities, they will be invested either in the assets, either in the goods, or either in the form of cash. So liabilities and capital are the representative of assets because they are shadow of the assets. So sure, they will be equal to the assets. Now, second things, debit and credit. These are two words you always listen in the account. Debit, credit, debit, credit. So what is this debit, credit? Actually, debit and credit has no any meanings. They have no their personal meaning, but they indicate about the nature of accounts. So when we record debit or credit before any accounts, then we can decide what is the nature of this account. There are the two approaches for making the debit and credit. First is the American approach or modern approach. According to this, which item we will make the debit or credit? According to modern approach, all the assets, expenses, and losses according to modern approach, if the assets, expenses or losses they are increasing, they will be denoted by debit. If you will purchase any assets, the assets will increase. In that case, you will write assets account debit. If you pay the salary, the amount of expenses will be increased one, so you will write salary account debit. So for any expenses, assets or losses, if there is an increase one, you will denote it by debit. Or the decrease one, you will denote it by credit. Second is the liabilities, capital, income, profit, if these will be increased, you will mention by credit, and they will be decreased, you will mention by debit. So you have to watch the transaction. If the liabilities, capital, income and profit are increasing, you will denote it by credit, or they are decreasing, you will denote it by debit. But in the case of assets, expenses or losses, if these are increasing, you will denote it by debit, or they are decreasing, you will denote it by the credit. All the software, accounting software, either Tally, GST Tally or Lotus or accounting software, anyone, they are developed on the American approach. So when you develop the accounting software, always this approach are in their mind, and on this approach they decided which account they have to make a debit or credit and how. Secondly is the English approach. This is called traditional approach, and this is also called golden rule of debit and credit. Under this, how we indicate the word debit and credit. Like you see SS. So SS, if they are come in, you will make the debit, or SS goes out, they will be credit. So here the accounts are divided in three parts. First, personal account, real account, and nominal account. Personal account, this belongs to the person. Real account, they belongs to the assets, and nominal account, they belongs to the income or expenditure. So first we see the personal account. According to this approach, receiver always will be debit and giver always will be credit. Secondly, the real account, this denote to the assets. So assets come in, they will be debit, or assets goes out, they will be credit. And nominal account, so according to nominal account, all the expenses and losses will be debit, income and profit, they will be credit. So you are seeing in different approach, different rules are followed, but result always come the same one. There is no change. Either you adopt the American approach, or either you adopt the English approach. This American approach are mostly used to making the software, and English approach are mostly used in the manual recording. In the English approach, there are some cases of due and closures, where these rules are the reverse one. When the real transaction are not done, in that cases, or either you are going to close the account, in that cases, these rules are reverse one. But here is not need of any types of change in any case. That is the reasons mostly software are developed on this pattern. So in the next lecture, we will see some numerical on the basis of accounting equation. Thank you.